Once more, I want to welcome you all to tonight's weekly market outlook review and outlook session. You're welcome, Mr. Evans, Mr. Joseph. I welcome you to tonight's class and others in the class. I welcome you all. So while we wait for the browser to open, let's go to the chat. Mr. Joseph requested that we look at which pair, gold and Euro USD. Okay. I think the market has opened, right? Yeah, the market has opened. This is the first candle, right? This is the candle for the day. So the market has opened. You know, the market opens 10 p.m. 10 p.m. So the market has opened. So let's start with gold, or let's start with Euro USD. Okay, let's start with gold. What are my expectations on gold? What are my expectations on gold this week? So as you know, we'd always start with the weekly time frame. We need to know the trend for the week. And that is why we start with the weekly candle. Okay, we start with the weekly time frame. We need to know the direction for the week before going down to the lower time frames. We need to know the direction for the week. So as you can see, I think gold will open by 11 p.m. Gold will open, okay, by 11 p.m. Currencies open by 10 p.m. Nigerian time, and gold is by 11. Okay, so last week candle closed as we can call this. What should we call this? What should we call this? Mr. Joseph, Mr. Evans, what would you call this? Drop it in the comments. Drop it in the comments. What would you call this? What should we call this? This should be a spinning top, right? This should be a spinning top. Or should we call this hanging man? Should we call this hanging man? Okay, well, it has a wick above it, and the wick below is like 2 times the body. So whatever you want to call it, you could call it an hanging man, or you call it a spinning top. Both candlestick pattern indicates change in trend, right? Okay, we can call it hanging man. It's okay. So both hanging man and spinning top are bearish reversal patterns. So if you call it a spinning top or a hanging man, you are correct. Okay. So both indicates change in trend. So now if you look at the previous week candle, what should we call this? Right? Is this qualified to be called a shooting star? Can we call this a shooting star? It looks like a shooting star, okay, right? But a shooting star, a valid shooting star, the wick above it is supposed to be 2 times the body, and the wick of this candle is not 2 times the body, right? It's not 2 times the body. A valid shooting star wick should be 2 times the body, okay? So last week candle closed as a spinning top and hanging man, which indicates changing trend from bullish to bearish. So this week, we should be considering going bearish on gold. We should be considering going bearish on gold. Now, the question is, should we get in now or at the current market price? It's one thing to know the trend of the market. It's another thing to know the right time and the right price to execute the trade. Okay, so if we are considering selling, at what price should we consider executing the trade? What time and at what price would be the right time to execute the trade? So we need to go down to lower time frames now. Now, last week, I believe a support was created. Okay, let me go back to weekly time frame. Let me apply my vertical line on last week candle. Okay, so after the close of last week candle, okay, so 5 candles on a daily time frame makes up 1 weekly candle, right? 5 candles on a daily time frame makes up a weekly candle. So we have 1, 2, 3, 4, 5. So last week, this was the support for last week market, and this was the resistance for last week market. So you could see that last week we could say price was in a range on a daily time frame. This was a range in markets. Price came down, went back up, and you can see So we could say last week, price was in a range. Neither the bulls nor the bears had the upper hand last week. So price is there. So we have resistance, we have a support. Now, based on the pattern we saw on the weekly time frame, we should go for a sell this week. So if we're going to sell this week, we should expect price to break the support. That will be the best time to consider going bearish on the daily time frame or on gold. This support should be broken. Now, this is the support on a daily time frame. Now, the support on a daily time frame is likely going to be different from the support on a 4-hour time frame. Now, when I'm trading support and resistance, I like to work with a higher time frame support and a medium time frame support. So, for example, this is the daily support. If we go down to 4-hour, I believe after the formation of this candle, a support was created on 4-hour. Let's just go down to 4-hour and see. So I like to identify, okay, so you can see on 4-hour, we had a support here on 4-hour. So I'd like to work with this zone. So the daily is the higher time frame and 4-hour is the medium time frame. So this, for me, is my demand zone. And the market is currently trading above this demand zone. So I would have to wait for price to break this demand, or some of you will call it your support zone, right? I would wait for price to break this zone. That is a 4-hour candle. A 4-hour candle should close below this support, because if you look at what we have on 4-hour here now, you can see price came down, tested this support. This was a resistance which became a support, right? Price came back, tested this support, and look at the next candlestick that formed. This is an inverted hammer. Can you see that? This is an inverted hammer, which indicates change in trend. What was the prior trend or the preceding trend? You can see it was bearish. You can see it was bearish, and the next candle closed as an inverted hammer, which indicates change in trend. So if we go by the pattern we have on 4-hour now, we should be considering buying. We should be considering buying. Are you with me? Now, the weekly says sell. Daily, we've identified a support on a daily time frame, and also on 4-hour, we've identified a support on 4-hour time frame. So if we are to go by the weekly pattern or weekly trend, we should wait. 4-hour and daily must align with the weekly time frame. Are you with me? 4-hour and daily must be in agreement with the daily time frame. And at what point would 4-hour and daily be in agreement with the weekly time frame? The break of this support. The break of this support. That is when 4-hour and the daily time frame will be in agreement with the weekly time frame. So if you are considering selling, you should wait for price to break this support. Are you following? Can you hear me, guys? Drop a comment if you can hear me. So you should wait for price to break this support. Now, it is possible that price would first clear liquidity residing at this high, these highs. A lot of retail traders would have executed sell, right? A lot of retail traders would have executed sell, and their stop losses would be this high. There are stop losses residing at this high. There are also stop losses residing at this high. So there's a high probability. This is liquidity. This is liquidity. This is liquidity. So it is likely they would want to raid all this liquidity. They want to sweep liquidity residing at this previous high before going bearish. Are you following? So it's either price breaks this support, okay, for you to sell, or you wait for price to clear this liquidity. Okay, wait for the institutions to clear all this liquidity before you sell. I hope you are getting me. I hope you're getting me. It is either price breaks this support for you to sell, or liquidity gets cleared. You ensure that they raid all the stop losses residing at these previous highs before you sell. So after liquidity has been cleared, what are you supposed to look out for? A bearish reversal pattern. You know all the patterns. Bearish reversal pattern, that's the next thing you should look out for. After liquidity gets cleared, You wait for a bearish reversal pattern to form. Now, after liquidity gets cleared, you don't have to wait for price to come and break support before you sell. Immediately liquidity gets cleared and a bearish reversal pattern forms, you should be looking for sell opportunity. You don't have to wait for price to now come down to break this support before you would sell. I hope you get that. So at the moment on 4-hour time frame, gold is bullish, and that is my expectation this coming week. First, I know they would clear liquidity reset at these previous highs. There is a high probability they are going to clear out the liquidity reset at this previous high before going bearish. That's my expectation on gold. Okay, that's my expectation on gold. Now, if price breaks this support, and you decide to sell from this support, remember, after a breakout from a support zone or a support level, price is expected to go and retest that support, which has become a resistance, right? If the support gets broken, this support becomes a resistance. So if there is a breakout from this zone, you should expect price to pull back to this area to come and test this resistance. It's a support which has become a resistance before you sell. I hope you are getting me. If you're trading the breakout from this support, wait for price to retest before you sell. Okay. And if you don't want to wait for price to retest this support, like I always tell you guys, everything, every move in the market it's a game of probability. Trading is a game of probability. There are no guarantees. Okay, there are no guarantees. It's a game of probability. So it is possible that price will not retest this area. It is possible. So what you need to do as a trader is to calculate the risk reward on the trade. Are you getting me? Is to calculate the risk reward on the trade. So for example, if let's assume the candle that will break out from this support closes at this level, let's just assume it closes at this level. This is where it's closed, and you decide to sell from this point. Now, if you're going to set your stop loss, you know there is a possibility for price to pull back and retest this area. You cannot set your stop loss below this area. It has to be in between this zone or above the high of this zone, which will be above this level. So if you're taking the trade from this point, your stop loss is supposed to be a few pips, at least maybe 10 pips above this area, because you know this area, price can pull back, come and test this area. So your stop loss, let's assume you now set your stop loss at this level. You know all these things. You should know all these things before you execute the trade. Now, you calculate the risk. What is the risk involved? Okay, we are entering from this point. Then my stop loss will be at this level. This is about 192 or 196 pips. You can see the market risk in this case will be 196 pips. The question is now is, okay, this 196, are you comfortable with this kind of risk? 196 pips market risk. Are you comfortable with, would your account accommodate the drawdown if price decides to pull back 196 pips against the trade? Would your account, your capital, would it be able to hold the drawdown? Are you getting me? So those are the things you will consider. So if you know that you're not comfortable with this kind of risk, personally, I can't risk 100 and almost 200 pips on a trade. On gold, maximum risk I would take is 100 pips. You know, gold is very volatile compared to currency pairs. Currency pairs, I risk maybe markets that would accommodate to be maybe between 40 and 50 pips. Anything above 50 pips, I want to see price pull back. I want to ensure that the risk on that trade is reduced before I would execute. But anything above 50 pips, most times I would avoid it. I would let that trade go or wait for price to pull back. And if I insist on taking that risk, let's say 60 or 70 pip risk, I would reduce my lot size on that trade to ensure that I don't lose more than my daily maximum drawdown. It could be $50, it could be $100. I would ensure that the lot size I would apply on the trade, if the trade goes against me, I mustn't exceed my daily drawdown. I hope you are learning. Hope you are getting value. Okay, so that is it for gold. With what I'm seeing on gold, gold is still going to go bullish before going bearish. Okay, gold is still going to go bullish before going bearish. So that's my take on gold. Any question on gold before I move to the next pair? Any question on gold before I move to the next pair? And that will be Euro USD. Let me know in the comment section. If you have any question on gold, let me know before we move to the next pair. Any question? Any question? Any question? Let's move to the next pair. If you have any question on gold, just drop it in the comment section. Okay, so let's move to Euro USD. Euro USD, let's start with the weekly time frame. Okay, so on the weekly time frame, last week was strongly bearish on gold. A major news was released on Friday. Yeah, NFP was released on Friday, and immediately NFP news was released, I think the data came out. Three major news was released from the United States. NFP, is it unemployment claims? Three major news, and all the news favored the dollar. And that's why you see, after the news got released, you see the massive drop. You see that the dollar became bullish, strongly bullish. You can see. So on Friday, this was Friday, strongly bearish, strongly bearish. You can see. Last Friday, no, yeah, last week, the US or Euro USD did over 204 pips, bearish. And I think the largest move was on Friday. Okay, this is daily. Yeah, you can see Monday, Tuesday, Wednesday, Thursday, Friday, Tuesday, and Friday. You can see the biggest move was on Friday. This is 75 pips. Let's see on Monday, no, Tuesday. Tuesday, how many pips from this point to this point? Okay, Tuesday was the biggest move was on Tuesday on Euro USD. So Euro USD was strongly bearish on Friday because the major news that was released for the dollar was positive. So now where is price at the moment? Where is price at the moment? Do you think it would be wise to sell from the current market price? Do you think it would be wise? Do you think it would be a smart move to sell from the current market price? I want to hear your take. Drop it in the comment section. What do you think? Do you think it would be smart to sell Euro USD to join the trend from the current market price? What's your take? What's your take? Mr. Daniel, Mr. Evans, what's your take? Do you think it would be right to sell from the current market price? Mr. Evans said no. Mr. Joseph, what's your take? Mr. Evans said no. No, yeah, it should not be a smart move to sell, okay, from the current market price. Price has already moved. So what do? We need to wait for price to pull back. If you are considering selling, we need to wait for price to pull back. Pull back to where? Pull back to what level? Okay, Mr. Daniel says no. Okay, good. We're on the same page. So we need to wait for price to pull back. Okay, we need to wait for price to pull back. So where should we expect price to pull back? Also, on the weekly time frame, I think price just tested. We had the resistance here, which became a support. Okay, price broke out from there. Then we had another, you can see here, we had the resistance also, which became, you can see resistance, which became a support. You can see price is currently sitting on this support. Can you see that? So let's identify this next. This is the resistance. Okay, so this is our zone now. Okay, this is the zone we should work with on the weekly time frame. This should be our support zone. Okay, this should be our support zone. So price tested this resistance level last week. Okay, and after the formation of last week candle, what pattern do we have on the lower time frame? Okay, now retail traders will see this as a breakout, right? This was a support, and there was a breakout from that support, right? There was a breakout from that support. So if there is a breakout from this support, then we should expect price, right, to pull back and test this support that has become a resistance. That's like a break and retest before we go bearish, right? So if you're expecting price to pull back, then there's a possibility that price will pull back to come and fail retest this level, or probably after the formation of this pattern, a fair value gap go down to lower time frame. A fair value gap was created on maybe daily or 4-hour time frame. We want to see price pull back to fill that fair value gap, okay, before we go bearish on Euro USD. So let's go down to daily. Let's see what we have on a daily time frame. Okay, so on a daily, you can see we have a fair value gap here, right? That is the gap in between the low of this candle and the high of this candle. So that's my expectation on Chi on EU. I want to see price pull back to this zone. And also there's a possibility that price will come and clear liquidity reset at this previous high, right? Because this is where a lot of retail traders have their stop losses. Their stop losses residing. A lot of retail traders would have entered sell last week, and their stop losses would be at these highs, these previous highs. So there's a possibility that price, they might want to come clear the liquidity residing at this previous high. But this is my first target. This is the first area. Okay. This is where I will set my first TP will be this zone. So let's calculate from the current market price, okay, to this area. This is about 134 pips. That's okay. 134 pips. So I'm expecting price to pull back, okay, to this zone. If price breaks out from this zone, then it's likely they will come clear liquidity at these previous highs. Are you with me? Are you with me? It is likely they would come clear liquidity at these previous highs. So after the close of last Friday candle, let's go down to 4-hour. Okay, let's go down to 4-hour. Let's see the pattern we had on 4-hour on Friday. Okay. So you can see what we had here on Friday. This is just a bullish candle. This is not a bullish reversal pattern. It is just a bullish candle, right? Indicating that the buyers are showing up in the market. Okay, demand, there's demand for, or little demand for euro. Yeah, there's little demand for euro. So let's go to 1 hour after the close of this candle on 4-hour. Let's see the pattern we had on 1 hour. Okay, so here we have several. This is an armor. What do we call this? Should we call this a doji? Okay, so we have what looks like a bullish reversal pattern on the 1 hour time frame, right? Looks like a bullish reversal pattern. So like I said, I'm expecting price to pull back to this zone, fill this fair value gap, okay, before going bearish. So at what point would I buy? Okay, at what point would I buy? As you can see, we have a resistance here. This is a resistance. This high was used to clear the liquidity residing at this previous low. Okay, this high, this was the high, right? That was used to clear the liquidity residing at this equal lows. You can see, so it created a resistance. So this is where I would be considering buying Euro USD. If 4-hour candle closes above this zone, if a 4-hour candle closes above this zone, I would go bullish on Euro USD. Okay, I would go bullish on Euro USD. Okay, if 4-hour candle closes above this zone. Now remember, a lot of retail traders would have executed buy, and their stop losses will be at this low, which is an area of liquidity. So there's also a possibility for price to come clear liquidity. Are you with me? There's also possibility for price to come clear liquidity before going bullish. I hope you are with me. Okay, so if I decide to buy, if a 4-hour candle closes above this area and I decide to buy, I want to set my stop loss several pips below the low of this candle, maybe at least 20 pips below the low. So let's assume a candlestick, 4-hour candle closes at this level and I decide to buy. I'm supposed to set my stop loss here. This is about 35 pips. So I'll set it, my SS should not exceed 50 pips. So that will be 15 pips below that level. So my SL will be around this area. Okay, this is where I'll set my stop loss, 50 pips. And my first TP, let's see, from that point to this point. Okay, this is 51. This wouldn't be my first TP. My first TP will be at this area, but immediately price breaks this high, Immediately price breaks this high, I would adjust my stop loss to this low. Are you getting me, guys? Okay. Immediately price breaks this high, my stop loss will be adjusted to this low. So my risk on the trade will reduce from 50 pips to about 36 or 35 pips. I hope you get that. So that's my take on Euro USD. I'm looking for a buy. Okay. I want price to pull back to a premium area before I would go bearish on what's it called? On Euro USD. So if you apply you can see on 1 hour, okay, this is 4 hour time frame. We still have a fair value gap here on, you can see a fair value gap was created here. We had a fair value gap here, as you can see. So we had a fair value gap here. Thanks, Mr. Joseph. We had a fair value gap here. We had a fair value gap. Now, the question now is, which of these fair value gap are you going to work with? Okay, which of these, you have fair value gap here, you have fair value gap here. There are a lot of several fair value gaps. So the most valid or the best fair value gap to work with is the one at premium. Okay, that's the fair value gap you should work with. You don't work with fair value gap that is at discount. The fair value gap that you work with must be at premium if you want to sell. Okay, so if you apply, sorry, I would have to delete all this. If you apply your Fibonacci tool, the Fibonacci tool is the tool we use in identifying premium and discounts. Okay, make use of the Fibonacci tool to identify the premium area and the discount area. If price is at premium, you look for sell, right? You don't buy when price is at premium. When things are expensive, people do not demand, right? Demand drops when price of an item is expensive. And people buy when there is a discount on a product or an item. When it is cheap, that is when people buy. So you should always buy at discount and sell at premium. So how do you know price is at premium or discount? You make use of your Fibonacci, okay? Fibonacci tool, you identify the most recent swing high, and this is the most recent swing low. So this is the most recent range on Euro USD. This is the most recent range on 4-hour time frame. Okay, this is the most recent range on 4-hour time frame. So we want to see price pull back, okay, to a premium area. Okay, and the premium area, let's identify the fair value gaps at premium area. We have this. So these are the areas we should be considering selling. Okay, these are the areas we should be considering selling. You can see these fair value gaps. These are the fair value gaps at premium area. These are the areas you should consider selling EU. Okay. Okay, so on EU, okay, we're on 4-hour time frame. You can see this was the previous range on 4-hour. This was the previous range on 4-hour. If you apply your Fibonacci from this swing low to this swing high, when price got to this area, you can see this is the fair value gap on, if you're working with this previous range, this is the fair value gap, which is at a discount area, right? This is a discount area. If you apply Fibonacci from this swing low to this swing high, now price ought to have pulled back when it got to this area. Can you see? When it got to this area, price ought to have pulled back. There was a little rejection before this breakout. Okay, before this breakout. And it's because of the fundamentals. That was why price broke out from this fair value gap. Technically, price should have pulled back to a premium area. And probably they know this area is an area of liquidity. So they had to clear all the stop losses residing at these lows. Okay, and also, as you know, the major news that was released favored the dollar. That's the reason for this breakout. Technically, price should have pulled back to a premium area before going bearish. Okay, so that's my take on Euro USD. I want to see price pull back to this will be my first area to consider selling. The candlestick pattern that forms here will determine if I should go bearish. Are you getting me? It's the candlestick pattern. If a bearish reversal pattern must form inside this gap before I would execute a sell trade. But if price breaks out from this zone, then it's likely going to aim for this next zone. Now, when price gets into this zone, a bearish reversal pattern must form. I wouldn't just jump in and start selling because price has entered this zone or has hit this level. No, there has to be a candlestick confirmation pattern indicating that the trend is about to change from bullish to bearish. Okay, so first thing, price is at premium. And second thing, a bearish reversal pattern has formed in that area. That will be the right time to sell. Okay, so that's my take on EU. So as it is now on EU, this low, like I said, is an area of liquidity, and there is a 70% probability that they might clear the stop losses residing at this low. So patiently wait for London session. Okay, wait for London session between 8 and 9 a.m. That is when you should look for your buy opportunity. Okay, now tomorrow is Monday, as you know. Sometimes price movement on Mondays is very unpredictable. Okay, it's very unpredictable because most of the institutions don't trade on Monday. They don't trade on Monday. They just study the charts to see what retail traders are doing in the market. They just observe the moves on Monday. Then on Tuesday, Wednesday, that is when the institutions execute their trade. So for them, Monday is just for planning. And Tuesday, Wednesday is execution. Okay, so if you're trading on Monday, like I've always advised, you should always risk less on Monday and on Friday. Okay, risk less on Monday. If you can avoid trading on Monday, fine. Okay, if you can avoid trading on Monday, fine. But there are sometimes you will see a very good setup. A very good setup. You see your setup. You just have to execute the trade. Well, on Mondays, just risk less. Okay, risk less on Monday and on Friday. Then you observe most times that you make money between Tuesday, Wednesday, Thursday, and they give it back to the market on Friday, right? So risk less on Friday, risk less on Monday. Let's assume between Tuesday, Wednesday, Thursday, you've made some good profit. Let's say you make $100 or you make $50. On Friday, you shouldn't risk more than $10. So at the end of the week, at least you'll go home with like $40. Are you getting me? Are you getting me? So risk less on Monday and on Friday. Personally, if I see a good setup on Monday, I will trade. It's just I'm going to risk less. Okay, I'm going to risk less. Always execute your setup. Always execute your setup. Always execute your setup because you'll feel bad if you have a setup and you didn't execute the trade. You will feel bad and it could affect your future trades. That's why most people do revenge trading. Revenge trading sometimes is not about you losing a trade or a trade going against you. You know, sometimes it's because you didn't take the trade that you're supposed to take and the market went in your direction. You feel bad and you see yourself taking trades that you're not supposed to take. So it's better to take less risk, okay? At least you know that you executed the trade than you just letting go the trade and at the end of the day, the market went in your direction. So it's not about maybe you place the trade goes against you and you go in again. You know? Sometimes revenge trades as a result of lost opportunities in the market. Okay, so thank you, Mr. Daniel. Thank you. All right, so that's it on Euro USD. We're spending much time on each pair, spending much time. So that's it on Euro USD. I hope that is clear, Mr. Joseph. I hope that is clear. Which other pair do you want us to look at? Which other pair do you want us to look at? Which other pair? Which other pair? Okay, we need to look at GU. Very important. Very important. Let's look at GU. We have to look at GU. Okay, GU and GBP Good. GU and GBP GU. Okay, let's see GU. Okay, let's look at GBP before we look at. Okay, so GBP is bullish. GBP JPY is bullish. GBP JPY is bullish. On the weekly time frame, if you ever look up here, on the weekly time frame, if you attended last week's session, I told you guys there's a high probability that GJ will come fill this gap before going bearish. So GJ is bullish at the moment. But you would agree with me that this won't be the right time or good price to buy GJ, right? This won't be the right time. It's not a good price to buy GJ. GJ has already moved. GJ started buying from this point. Has done over 1,000 pips. You can see GJ has done 1,000 pips. So if you didn't join the trend at this early stage, why would you want to buy from here? The risk is too high. The risk is too high. There's a high probability that price will come here, but buying at the current market price is very risky. Okay, it's very risky. If I want to buy GBP JPY, I want to see price pull back. You can see this is a breakout, right? This is a breakout from a resistance. This is a breakout from a resistance. So I want to see price retest before going bullish. Are you getting me? Price should retest this level before going bullish. This is not a good price to buy. This is not a good price. Or I think also if we check daily or 4 hour after the formation of this candle, if fair value gap, I'm sure if fair value gap was created on a lower time frame. So this is our daily time frame. This is daily time frame. What do we have here? We had low, we had high, right? We also had, this is higher low, right? Price has closed above this high, giving us a new high, right? Yeah, that's closed above this level. There's a break of structure. This is a break of structure, right? So it's bullish at the moment, right? That's a break of structure. That's a break of structure. Also, if you go back, let's see what played out here. This is the daily time frame. Okay, this is the daily time frame. We had a low, we had a high here. This structure was bullish, right? Because it was forming series of higher high and higher low, right? Higher high, higher low, higher high, higher low, right? So we had, this was the most recent higher high, higher low. This is the daily time frame. And there was a shift in market structure, right? There was a shift in market structure. This candle broke out from this low. So there was a shift in market structure at this point. Are you with me? There was a shift in market structure at this point. Now, after shifting market structure, what is price expected to do? Price is expected to pull back to fill the fair value gap, liquidity void before going bearish. Can you see that? So if we work with this previous range, okay, we want to see price pull back, right, to a premium area after the shift in market structure. So if you apply your Fibonacci from this swing high to this swing low, we want price to pull back, right, to a premium area. See what I said? I'm expecting price to pull back to fill this fair value gap at a premium area before going bearish. Okay, and if we go down to 4 hour, like I said, let's go down to 4 hour. I'm sure if fair value gap was created. Okay, let's go down to 4 hour. So you can see on 4 hour, good. So we have this fair value gap on 4 hour. You can see this gap. Can you see this gap? Okay, this is it on 4 hour. Price should fill that gap. Let's go to 1 hour. Okay, so you can see on 1 hour. So if I want to buy, do we have a fair value gap on 1 hour? Okay, this should be it on 1 hour. Okay, price should fill this gap. Okay, price should fill this gap. Are you with me? Price should fill this gap. Now let's go back to daily. Was it on daily I identified identified, was it on the weekly identified the support that need to be retested? Okay, so this is the support that needs to be retested. Okay, so yeah, so this support here. So if price pulls back to this area, I could risk buying from this area and my stop loss will be below this level. I hope that is clear. I hope that is clear. And I think if we go down to 15 minutes, there is still a fair value gap below, which will be close to, you can see, good. This is 15 minutes. You can see this fair value gap on 15 minutes, which is yet to be filled. So this is another area to consider. So we want to see price fill this gap entirely, okay? And the pattern that forms inside this gap will determine if it should go bullish. If price breaks out from this gap, then it's likely going to come fill this fair value gap. So these are the areas I would consider buying GJ. Okay, GJ is still bullish. GJ is still bullish. Okay, don't trade against the trend. Flow with the trend. You can see on the monthly time frame also, this was a strong support level. The market tested that level, strong rejection from that level. You can see it's a strong rejection. So there's a high probability price will pull back to this area, but you want to wait for price to pull back. Okay, there should be a retracement on GJ before you buy. I hope that is clear. I hope that is clear. So that's my take on GJ. GJ is still bullish, but wait for price to please pull back. Okay, wait for price to pull back before you buy. I hope that is clear. So let's move to the next pair. Maybe GU will be the last pair we'll be looking at in today's session. G is likely going to be the last pair. So let's go GU. GU. Okay, so GU. Let's start with the weekly. I think I've done my analysis on GU. Okay, I'm expecting a buy, okay, on GU. Okay, let me move this. Let's see this. I want us to check the calendar also before we end the session. A lot of major news this week. So let's go back to the chart while that is opening. Okay, so let's start with the weekly. What can we see on the weekly? Price is sitting on resistance. That's a resistance on support. You can see that price is sitting. Okay, this candle still was a first candle. That was like 3 or 4 weeks ago. This candle tested this zone. You can see. And after that candle, after price tested that zone, what happened? You can see the strong rejection. You can see there was a strong rejection. A doji candle formed after it tested this area. You can see strong rejection. And for the next 2 or 3 weeks, you can see GU was bullish. You can see next 2 weeks. You can see GU was bullish. And the last week, it was bearish. Remember, a major news was released that favored the dollar. And that could be the reason for the bearish move we saw in the markets last week. Okay. So after the close of last week candle, what pattern do we have on the daily and the 4-hour time frame? That will determine the short term, okay, or medium term trend. Okay. So let's go down to daily. So last week candle, let's say on daily, you can see how the daily candle closed on Friday. Indecision. This is an indecision candle, right? This is an indecision candle. So, and also there's a danger area or danger zone near this area. A lot of stop losses are residing at this area. A lot of stop losses are residing at this area. So there's a high probability they will come sweep liquidity reset at this area. Also on the daily, we have a fair value gap here. Okay, we have a fair value gap here, which I think needs to be filled. Okay, so and last week candle closed as a doji. This is a bullish candle. You can see the body is bullish. Also, if we apply our Fibonacci from this swing low to this swing high, you can see price is out where discounts. This is the previous range, right? This is the previous range. This is the most recent swing low, or you call it your higher low, right? Yeah, higher low, swing low. So you can see price is at discount at the moment, and what pattern formed at that discount area? What pattern? Very important. This is a bullish reversal pattern. This is a bullish reversal pattern. Also, if you go back, let's go back. At this point, I believe the fair value gap was created here. Let's go down to lower time frame. Let's go down to lower time frame. A fair value gap was created. Let's see. Okay, cool. So you can see here a fair value gap was created. Okay, fair value gap was created here. Let me change the color. I want to confirm if price tested that area. Let's see. Okay. So you can see. Can you see this? Can you see this? Price came back to fill the fair value gap at this discount area. You can see, though it didn't fill it entirely, right? We still have a little space here. Okay, that needs to be filled. It didn't fill it. So it's possible they might still want to come for the stop loss deciding at this low. They might still want to come for it, push price a little bit below this level before going bullish. Okay, so based on what we have on a daily and 4-hour time frame, I'm looking for buy opportunity on GU. Okay, buy to a premium area. Okay, you can see we have fair value gaps here on 4-hour. Okay, so I'll be aiming for this area. I want GU to pull back to this area before I would consider going bearish. Okay, but my bias this week on GU is bullish. That's my bias for GU this week. But like I said, there are several major news that will be released, and you know, these news, they play a major role in the market. They do have high impact on price action. Okay, so a few minutes. Sixth to 12th. I think CPI and FOMC will be released this week. So we are interested in the major news. So I'm going to filter out the medium impact and the low impact news. Okay, I'm going to filter them out. Okay, so let me remove this. I'm not interested. I'm not interested in this. Okay, so as you can see, there are a lot of major news. Yeah, from Wednesday, you can see that on Wednesday, New Zealand dollar, 2 a.m. Nigerian time, New Zealand dollar official cash rate, and rate statement, and also FMC meeting. FMC meeting will be by 7 p.m. Nigerian time. Okay, so sorry, that's for the dollar on Wednesday. So we're expecting 3 major news, 2 from New Zealand and 1 from the United States dollar. This is a meeting. Okay, there's no data here to work with, right? There's no data here to work with. It's a meeting, and you should avoid trading all this FOMC meeting minutes. Avoid trading it. Okay, it's 7 p.m. So what are you doing in the markets by 7 p.m.? You should be out, right? Before 7 p.m., you should have closed your trade. That's on Tuesday, right? That's on Tuesday. Okay, sorry, Wednesday. Yeah, Wednesday. Monday, Tuesday, no major news. Monday, Tuesday, no major news. So if you see a good technical setup, then you should take the trade. Monday, Tuesday, no major news. Wednesday, two major news from New Zealand and one major news from the United States. Then on Thursday, core CPI, Consumer Price Index, will be released. So what is the expectation? The previous was 0.3%. Then the forecast is 0.2%. They're expecting a drop, right? A decrease. That's the expectation. That's the forecast. Okay, so we wait for the actual data to be released. We can't work with this, okay? We need to wait for the actual data to be released. So if the actual is higher than the forecast, that will be positive for the dollar. And if the forecast, sorry, the actual is less than the forecast, that will be negative for the dollar. Okay, that's it. Then same time, all this news will be released same time on Thursday, 1:30 p.m. So on Thursday, if you're going to trade USD pair, I would advise you wait for the major news to be released, please. 1:30. So you should look for trade opportunities from 2 p.m. Wait for price, for the market to settle. Okay, wait for it to settle before you jump in. And you need to see a good technical setup before you jump in. Okay, so by 2 p.m., that's best time. That's time I would suggest you trade on Thursday, 2 p.m. So if you execute a trade on Monday or Tuesday, you should close it before 7 p.m. on Wednesday. Then on Thursday, wait for the news to be released, which will be by 1:30. By 2, you could have a good technical setup that you can execute. Okay, so that's my take. Okay, then on Friday, if you make good profit on Thursday, close your trade. CPI is a very volatile news. Okay, it's a major news, and if you've traded CPI before, you observe the market when CPI data has been released. You know that market becomes very volatile, very volatile. Okay, so if you make good profit on Thursday trading CPI, then you should close your trade before the close of the market. Please, if you are not good at trading fundamentals, then avoid it. Please avoid it. You can trade the London session before CPI, but most times when a major news like CPI, FOMC, non-farm payroll, when those news are being expected, most times from Monday to the time the news will be released, price will just be in a range. Price will just be in a range. So it's best you avoid trading until the data is released. That's what I've experienced in the markets. That's what I've experienced. Most times price will just be in a range. Last week from Tuesday, Wednesday, Thursday, you notice that most of the GBP USD pairs they were just in a range, hunting for stop loss, setting traps for retail traders to buy and sell. And the first thing they did was to just go for stop losses. So it's best to avoid, trading on those days. Are you getting me? If you are not experienced, you need to know what you're doing if you want to trade on days like this. And when there's a major news, markets becomes volatile, opportunity to make money, also opportunity to blow accounts. So you have to know what you're doing in the markets for you to trade this major events. I hope that is clear. Then on Friday, core PPI, that is production price index. CPI is consumer price index. PPI is production price index. Okay. So for unemployment claims, the previous was 225, and their expectation is forecast is 229. So unemployment claims. Okay. So they are expecting is it decrease or increase? If forecast is 229 and the previous is 225, unemployment claims. Okay, they're expecting an increase. Yeah, that's an increase. Okay, that's an increase from 225 to 229. That will be an increase, right? So we'll wait for the actual to be released. Now, in this case, actual should be less than forecast. This is unemployment claims. So actual, if actual is less than forecast, that will be positive. I hope you get that. This is unemployment claim, not employment. This is unemployment claims. It means that you have more people who are unemployed. That's what it means. Okay? It means you have more people who are unemployed. So if the actual is less than, if the value released is less than the forecast, that would be positive. I think I'm correct. Am I right? Yeah, that should be positive for the dollar. Are you getting me? But if the value, the actual, is higher than the forecast, that will be negative for the dollar. I hope I'm correct. Are you getting me? I believe, Mr. Joseph, you saw I filter out the minor and the medium impact and the low impact data, right? You saw I did it. Okay. So that's it for unemployment claims. Then core PPI was the expectation. The previous is 0.3% and the forecast is 0.2%. So they're expecting a decrease, right? They're expecting a decrease, right? Then PPI also, they're also expecting a decrease, right? From 0.2 to 0.1. So we wait for the actual. We can't do anything with this data we have, right? We can't do anything with the previous and the forecast. The actual is what will determine which direction we should follow, either to go bullish or bearish on the dollar. And also 1:30 p.m. card news will be released, employment change and unemployment rate. So that's what we have for next week. Okay, you should pull this into consideration as you trade this week. It is very important. It is very important. So that you not just execute a trade and immediately, maybe by, let's say or you execute a trade on Thursday. If you are not aware that a major news will be released, let's say on Thursday, okay, 1:30. If you are not aware that a major news will be released, you could have a good technical setup. You would execute the trade and immediately the trade will just get against you and you'll be wondering, what happened? But if you are aware that a major news was being expected, then you'll know that, okay, it's the reason I lost that trade is because the major news didn't favor my technicals, right? So you know why you lost the trade. You are not in the dark as to the reason why the trade didn't go in your direction or the reason why the trade just went against you immediately. You know, some people would say, it's like there are some people behind, or village people. They'll tell you the broker, they are watching my trades. Immediately I execute the trade, they just went for my SL. It's not the broker. You are the one that was uninformed, right? You are the one. So you should take that responsibility. So it's very important that you know the days that major news are being expected in the market. I hope that is clear. Just go to filter, you have filter here. This is a filter. See this, go to filter and you select the news you're interested in. You can see it here. All these were ticked. All these were ticked. I had to untick them because I'm not interested in them. Okay, you can even select currencies you want to focus on. You can select, you can see all these were ticked. You can decide to untick the ones that you're not interested in. Like this CNY, I don't trade it, so I can just remove CNY. See, and just focus on the major currency pairs. Okay, event types also. I can just decide, okay, all I'm interested in is CPI and all that. Just remove all the other, news events. So that's it. So I think we're done, right? That is all for tonight's session. That is all for tonight's session. Do you have any question? If you have any question, just comment. Just drop a comment. If you have any question, drop a comment. If you have any question, drop a comment. Drop a comment. If you have any question, drop a comment. Let me know. If you have any question, let me know. Let me know. Let me know. If you have any question, any question, any question, any question, any question. No question. Do you have any question? Do you have any question? Mr. Joseph, Mr. Evans, if you have questions, let me know. Let me know in the comment section. Yeah, yeah, yeah. You're welcome, Mr. Daniel. This week will be a great week. Yeah, it will be a great week. All right, no question, no question. It will be a great week. It will be a great week. Let's just let's ensure that we follow our trading plan, okay? And most importantly, we must apply good risk and money management, okay? We must apply good risk and money management. Okay, one trade should not eat up profits that we have gathered over time. Okay, profit that we have made over time. We shouldn't allow just one trade to take away everything. That's the mistake most traders make. Okay, that's the mistake most traders, newbie especially. Okay, so please take it easy on your account. Don't over leverage. Don't over leverage before you enter a trade. Know the risk involved and know the dollar amount that you would lose if the trade goes against you. Don't be in a rush to execute a trade. Sometimes if you're in a rush to execute a trade, you go and use a higher lot size. You would think it's 0.01 that is there, not knowing that that's changed to 0.1. Probably you have a demo account and you have a live account that you are trading. On the demo account, you are using 0.1 lot size. On your live account, you are using, let's say, 0.01. And you know, if the last trade you executed was on the demo account, when you switch to your live account, for those who are using mobile phone for trading, when you switch to your live account, that's 0.1 that you used on the demo account before switching to your live account. That will be the lot size that will be there. So if you're in a rush and you just decide to go and execute the trade, you will realize later that the lot size you use is 0.1. And if you don't have enough funds in your account, that would be a serious drawdown. Or the next thing you will see when you log in, when you open your chart, will be margin call. And you'll be like, what lot size did I use? You check it is 0.1. Account OT law. Don't blow. Do you get it? So don't be in a rush to execute your trade. Know what you're doing. Check that lot size. That lot size. Check that lot size. Ensure that it's the lot size you're supposed to use on that trade. Very important. You're laughing, Mr. Joseph. It has happened to me. It has happened to me, and I've blown accounts as a result of that. You know, instead of using a micro lot size, I went ahead and used a mini lot size. And by the time I logged in to check, account still low. When you see the negative, you wouldn't want to even close the trade. You will now be hoping and praying that price should reverse. You understand? You'll be hoping and praying, you know. So please check that lot size. It's very important. Very important. All right, guys. That will be few minutes. That will be all for tonight's session. I really appreciate you all for your participation. It is my greatest desire that you all prosper, you all excel in your trading career. But like I've always said, you have a lot of work to do. Okay, you have a lot of work to do. Most of you are just relaxed. You are just relaxed. Okay, most of you are just relaxed. You don't study, you don't do back testing, you know. Trading is not child's play. It's not child's play. It's serious business. It's serious business. Take it serious. Treat it as a business. Don't gamble. Don't gamble. A lot of people are just gambling in the market. They are just gambling in the market. If you want to be the top 10% or 5% that are profitable in this business, you have to study. You have to study. And I posted something in the group earlier today that if you don't study, you keep paying us. Those of us that do the study, we'll keep discovering new things and you'll be paying us. Some of you that are in that group, tomorrow or next month, I can launch a new strategy. You will still pay me. Are you getting me? You will still pay. You will pay. Are you getting me? You will pay. So do the study, do the work, so that people can also pay you for the knowledge, for your time invested. Are you getting me? Do the work. Do the work. That is my goal. You know, when I mentor you, I want you to, you know, spend time on the chart, make new discovery. You understand? You want to make money, you need to have something unique. You understand? You need to have something unique. That's the reason I study. I want to create something unique, something you can't find anywhere in the world. Are you getting me? You want to make money, you need to create something unique. You don't want to be competing with anyone. You understand? You don't want to be competing with anyone. I'm not there for that kind of parole. Just create something unique. And you can charge people whatever amount you ask them to pay, they will pay because they can't get it from anywhere. They can't get it from anywhere. They can only get it from you. So you need to spend time to chat on the chat if you want to create something unique. Today, then I've spent, before this class, I've spent close to like 3 hours on the chat. 3 hours on the chat, and I've listened to not less than 2 podcasts or 3 podcasts, close to like 4, 5 hours. If I'm on the road, I'm listening to a podcast. I'm listening to a podcast on the road. Before I go to bed, sometimes I will still listen to podcasts. It could be motivational, it could be, technicals. I don't pay, I don't these days I don't even study, I don't look for strategy, just podcasts and listen to successful traders. What are the things they do? Why are they successful? Why are they profitable? You know, listen to podcasts, listen to podcasts, listen to, when you listen to podcasts, you would get to know what profitable traders are doing and what those who are losing in the market, what they are doing. So listen to podcasts. I spend a lot of time. You check my YouTube, if you see the videos I've downloaded, sometimes I just, I just laugh, say, uh, so when I talk, sometimes people don't understand. They study like, say, that's why when I see some people teach some concepts, I just laugh like, this one, you see they learn, you see they learn. Okay, so guys, let's study, let's study. I want you guys to even challenge me. That is why I mentor people, you know. That's why I mentor people. When you teach people, when I come on, I invite people for classes like this and they just show up. I'm not doing it for you. I'm doing it for myself too, because these concepts, they will stick. Do you get it? That's why I love teaching. When you teach people something, that concept, that idea just sticks. It sticks. So it's good you teach. As you teach, you would learn also. You will discover new things. So you guys are not challenging me, and I'm not happy about it. You guys are not challenging me. You're not challenging me. I want you to come up with your own discovery. Come up with your own discovery, right? You guys are not challenging me. I want to grow. You guys should challenge me. Peps, you guys should challenge me. Come up with your own concepts. So that when we come for market analysis like this, me and you go to debate. I go say this thing I buy, you go say na sell. And I just kind of challenge I want. Not every time I say buy, you say buy. No. Come and challenge me. Mr. Daniel, hope you can hear me. Mr. Evans, hope you can hear me. You guys should challenge me, please. Challenge me so that I can go back to the books. Okay. All right, guys. It's been a great time with you guys. I really appreciate you guys. Do have a wonderful night. So there will be no class tomorrow. Okay. The class that was supposed to be having on Monday on YouTube, I've scrapped that. It's only going to be on Sunday because I believe you need to know what you should do before the market opens. I'm even considering the ones we have on Tuesday, Wednesday should be at night so that you know what you would do. Okay. Before the market opens, before the London session, not when the market has opened. Most times when we do analysis like that, when we come online on by 10, 11, price has already moved. You've missed that move for that day. So I think the night, or what do you guys think? Let's be having the session at night, maybe by 9 or 10 p.m. Tell you guys what you should expect in the market, and the next morning you know what to do. What do you think? What do you think, guys? What do you think? What do you think? Mr. Joseph, how is they paying you for watching screen? Uh, okay. Yeah, that night is, I think I've been like that daytime. A lot of people are busy during the day. A lot of people are busy during the day. Not everybody they do trading for living. Many people have 9 to 5, and that time is not a time you should be looking at your phone, even if you are working for someone, if you're in the office, 9, 10, where you just resume work, you can't look chat. You get as a big, if I be your boss, if I go query you, I go query you, if I be your boss. So I think that night will make sense. Yeah, that night by 10 p.m. Spend maybe 20, 25 minutes and we are done. Okay, so I think I will implement that. Okay, I'll let you guys know. I'll give you guys updates. Give you guys updates. So no class tomorrow. Okay, you're on night duty. Okay, night duty. So does it favor you, Mr. Daniel? Okay, night is okay. Okay, all right now. So most likely tomorrow we'll meet by 10 p.m. All right, guys, let's go to bed. Good night.